Good morning, everybody. Welcome to today's stream. We're going to keep this one nice and short. Oh, goodness. Dobie! Hey! Hey! Oh, my God. Great. Dude! No! Get in there. Babysitting my parents' dog. I'm going to restart the trading view idea. Oh, Christ. All right. Hey, thank you for tuning in. Let's do this. So, looks like our Bitcoin daily pivot is confirmed to be broken. It is the largest red candle we've seen in quite some time. And goodness, does it inspire some fear and panic, to put that lightly, to say the least. We have a lower low and a broken mean reversion pivot. I'll be honest, it does not inspire confidence. We also had a really good lesson on why you should wait for candle closes before you take your signals. Because while we had, you know what, actually, that's not even the case. We just got completely faked out. We had our 14-period CCI roll, and then it immediately resumed downward expansion. You know, if this is where trend breaks, that'll be quite disappointing. However, this is the first significant lower low that we've seen in this entire trend, other than this at the very beginning, which was a scoop up for liquidity. However, the question is, does the volume match? That's some really intense selling pressure. What we do need to talk about is the longest overexpanded period. Right, that bearish mean reversion pivot is active. We activated it a few days ago, and I simply chose to ignore it because my bias did not agree with the direction of the trend. And what's disappointing is just how strong that position actually would have been. We actually get rejected exactly on the longest overexpanded period there, where we have the initial break, we scoop down, test it from below, and see trend continuation. Technically, our target is now $8,000. All right. Yeah, that sounds pretty spooky. But the question is this the lower low in the meme of, quote, this is a sucker's rally? Is this the last scoop of liquidity before continued upward trend? It's really hard not to have a bias in this strong of an uptrend when you have a chart that is so astoundingly similar to a previous bull run. It is simply uncanny, and let me show you why. We're going to take a look at XAU USDG. Beautiful. And we are going to switch this to the monthly chart. Okay. So if I'm having some trouble selling this lower low, do forgive me. But I'm not inclined to sell just yet. Where we have the initial trend, followed by a compressionary period, followed by a compressionary period. We scoop up that nice rounding bottom. We have our first successful flag of compressing range, followed by a significant wick to the upside, followed by a significant wick to the upside. And then what happens? Large red downward candles creating a lower low, testing the previous high of the previous flag, right? So we actually have this level defined here. All right? Just as I had this level defined here. Now, previously in the gold chart, we did rush down and test that resistance, which is exactly what we're doing now. And I am very hesitant to actually expect the completion of the mean reversion condition down to $8,000. Although it's technically possible. You know, we could see that dip down before the resumed trend continuation. Just the question is, are you willing to sell out here so you can, you know, save that 10, 15% and risk missing your 300% upside? Yes, this does inspire fear and panic. And I am inclined to believe that this scoop for liquidity is, well, exactly that. A scoop for liquidity. So, in theory, we could see the completion of the bearish mean reversion condition on the 4-hour chart. We very could well revert all the way down to that 605 mean. All right, this dump could only be halfway over, and it would still fulfill trend condition. If we actually descend below this flag that here, then I would be much more hesitant to take any kind of long position. Of course, instead of just trying to buy now, your safest bet is to wait for the daily CCI roll. So when that 14-period CCI on the daily chart rolls from below negative 100 to above to above negative 100, that would lead quite nicely into trend continuation, in theory. So I'm super hesitant to take any position at this very second. A lower low is still possible. Fear and panic is kind of the name of the game at this moment. This is the moment where everybody screams, this is a sucker's rally. And goodness gracious, does it certainly look like it. Again, I'm super hesitant to sell anything. I am still bullish on this trend. Let's just be patient to see how it plays out. Okay? No need to take any significant risks at this time. Really, if you want to get a really good retracement value for attempting to take a long position, you can do so by buying that 605 mean on the 4-hour chart, which is roughly $8,000, okay? Or, again, the positive CCI roll on the daily chart. As far as our lower time frames go, let's look at our downward expansion here on the 1-hour chart, see if we can define any positive mean inversion pivots, so we can properly define bullish mean inversion, if that would occur. We're going to need to do the 15-minute chart. Goodness gracious, is that some selling pressure? Okay, let's see what this defines as. Yeah, our bullish mean inversion pivot's still super far away. We have not developed this trade far enough to actually gain a reasonable position quite yet. And I'll zoom in on this so you guys have a little bit better idea of what I'm talking about. Okay. So we're currently coasting on that 3.2 standard deviation of the locks, which does imply continuous downward expansion. Retrace up to $10,000 is still probable, right? Because our trend defining pivot is here. As long as we're below that pivot, trend is still aggressively defined to the downside. If we do break inside, that would also be a solid buy signal for you. Of course, your longest overexpanded period is going to, well, continue to expand the further this trend does extend itself. So ultimately, even though we're in the active bearish mean reversion condition on the 4-hour chart, I'm not inclined to short it simply because we don't have a good entry. We are technically defined at extreme values here in the micro time frames, so short entry just isn't probable, or at least viable. Right? Because if you were to enter a short here, you could still technically be defined a downward trend if we went up 6%. So really, if you have to take that short position, you can attempt to do the bounce on the locks, which would be just fine. But preferably, you would want to trade this bullish mean reversion condition when it triggers. Right? Because hopefully that would give you entry into longer-term trend. So significant spike to the downside. When we do see that roll up and hopefully trend continuation, we should see some significant price action to the upside, okay? That's my analysis for the day. It has been a pleasure. I will talk to all you folks later. And that's it for YouTube as well. I hope you guys have a beautiful for the day, right? Until I actually see the completion of this bearish mean reversion condition, I'm not inclined to call any longs, and I'm certainly not inclined to call any shorts. So, kind of a catch-22 at the moment. So, thank you for your patience. Let's let's see how this plays out. There's no reason to overexpose ourselves to risk at this time, okay? Have a beautiful day.